Hi, and welcome to the Grove Podcast video series. I'm Matt Battiali, your host. In these episodes, we try and bring you ideas and people and discussions that we at Mangrove Investor feel are important. These are parts of the investing and business world that maybe you don't see every day. So we try and highlight trends, strategies, and news stories that you need to pay attention to. So sit back, enjoy this episode, and thanks very much for watching. Hi, I'm Matt Battiali for Mangrove Investor, and this is part 3 in my series on copper. And I wanted to talk to you guys about supply today because there's been a news release out from Codelco, which is Chile's state-run copper miner. It's the world's largest copper producer, and in 2022, their annual production declined by 10%. So they produced 172,000 fewer tons of copper last year, and we just can't have that. As we know, in the last video I talked about demand, and the demand numbers are insane. They're soaring every year. We're going to need more and more copper, and if you haven't seen that one yet, I'll put a link to it in the description below, because you need to understand both parts of this, both supply and demand. And when you have when you have a year where the world's largest copper producer is in decline, we looked at two different scenarios in the demand side. One was the best possible scenario where everything goes right, and the other one was the worst possible scenario where everything goes wrong. And the divergence in terms of the demand for copper is fairly large. In the worst case scenario, the copper deficit, demand minus supply, it's really big really quick. And when you see headlines like the world's largest copper company produced less copper in 2022 than it did in 2021, we're leaning toward the worst outcome, not the best. So that's really important. And the sources for the problems at Codelco were 77% were due to problems with operations, and 23% were due to project delays. And this really encapsulates the problems that the copper industry is having today. And let's start with the operational problems. The big issue is that the world's 20 largest copper mines, the really big ones that make up almost all of the copper production, are old. They're really, really old. So the average age of these things from discovery to today is over 64 years. And when you look at the top 20, so number 3, Buena Vista del Cobre is in Mexico, 124 years old. Morenci in the US, 151 years old. El Teniente in Chile, 204 years old. So what happens with these mines is there's plenty of copper there, but it's the grade that continues to decline, or they have to move ore that doesn't contain copper to get to the next copper deposit that they can actually mine. And so you have trouble keeping up your production because you've got to move more rock to get the same amount of copper. And so it's hard to grow a mine when you're producing from material that has less and less and less copper in it. So you're seeing the head grades of these things, the amount of copper in the rock that they're mining, decrease. So they need either to move more rock, which means they have to increase operation size, which is a fairly big capital investment, or they've got to find a new deposit that has higher grade. And we're just not finding that. Or when we do find it, we're having a hard time getting it moved through the permitting process, which speaks to the other problem that Codelco is having. That 23% is developmental delays. We're having a hard time getting permitting or constructing new copper mines because it's hard to get the investment. Some of these things, a copper project that's truly massive takes a lot of capital to build. And so the payback times are fairly long. So it's hard to get that money to build these mines. The other thing is the permitting. A copper mine in isolation is a great idea. A copper mine in your county or in your state or in your backyard, well, that's not as much of a great idea anymore. And so we have giant projects in the U.S. here that aren't getting permitted. Pebble is a massive deposit in Alaska that could not make it through permitting because it got tied up by salmon fishermen. There were paths forward for that mine, I thought, but it got so politicized that you turn on a TV show about Alaska and you have guys wearing hats that have pebble on the top with a line through it. I thought that there was a way that the salmon fishery and the development companies could have succeeded, but it was dead before it ever happened because of the politicization of that mine. This is a mine in Alaska. Alaska is a state where prior to that, I would have said any project that you brought to permitting, short of it being in a national park, was going to get permitted, and I was wrong. This is a project that Anglo American paid $1 billion to own half of in 2006 or 2007, and then had to walk away from it because they couldn't get it permitted. Now, so these are headwinds to copper supply. You have tailwinds to copper demand. You have the government saying, if you want to get the full discount or the full benefit, the full tax break on your solar panel, your wind turbines, your electric cars, you've got to source your copper domestically or through a trading partner. So you have that on one hand, and then on the other hand, you're like, nah, we're not going to permit any new copper mines, or it's going to be really hard and really slow. You can see where I'm going with this. You have demand that's moving ahead rapidly and supply that's kind of being bottlenecked and constrained. That leads to higher prices. So what I'm researching right now in Mangrove Investors New Energy and in our Spotlight products are copper producers that are kind of new and upcoming. I'm afraid of legacy producers like Codelco, companies that have big old mines, that they have some existing environmental liabilities. One thing that people forget to do when they're evaluating mining companies is to look at what happens when these mines have to be closed or they run out of ore. A lot of companies, what they do is they put mines on care and maintenance. And so there's a carrying cost. They're not making any new metal out of these mines, but they don't want to have to close it because then they trigger a massive expense of rehabilitating and cleaning up these mines. So some of these legacy producers, and I would very much recommend to you, if you're a mining investor, that you do a little digging on these guys. These mines that are really old have to be remediated. And that's a huge cost. So you have these cost bombs sitting on the balance sheet of these legacy producers. And when they get triggered, some of these guys just can't pull it off. They're going to have to take on a lot of debt. Some of them may just have to go bankrupt. That's kind of been the tradition. So that's a little worrying. That's a risk, especially because I'd like to be into some of these things for 4, 5, 6 years. So you have to weigh the risk to reward. I'm much more inclined to buy a development project that has done everything the right way. They have a bond up for the cleanup so that they already have that taken care of, and their mines are new. These are the things that I'm looking for, where the economics work really well. And a lot of them are much more transparent because they're trying to raise money so we can see, the economics of the mine, and we can put our own numbers in so that we can figure out the sensitivities to the price, that sort of thing. Some of these legacy producers are just black boxes. They don't tell you much, and they really feel like ticking time bombs in some cases. So I hope this helps. Hey, look, if you found some value in this, hit the like button for me. If you want more of this kind of content, you can subscribe. We're trying to grow this channel. We're trying to grow Mangrove Investor. So take a look at the website. The Grove is free, so if you want to get some free content, we offer that. Spotlight is $99 for a year, and New Energy will make you a deal. So go over, check us out, take a trial, and see what you think. And thanks very much for watching. I'm Matt Batty Alley. Bye-bye. Well, look at that. You made it to the end. I hope you enjoyed the video, and if you did, give us a like and a subscribe. We'll make sure you keep getting great video content just like this
And thanks, as always, to Rob and Static in Verona for the music. I'm Matt Battiali for Mangrove Investor. Thanks for watching.